Welcome back to the channel, everyone. Today, we're going to be talking about Frax shares. So I'm going to be talking about the key components, the pros and cons, use cases, also a price analysis, and also a price prediction towards the end. So make sure to stay tuned for that. And also make sure to check out my Telegram group, which is completely free to join. It's linked in the description below. I'm sharecasing different news, price alerts, different trades, different things like that, and also just updates to the channel. So make sure to check it out. So first of all, what is Frax share? Frax share is a decentralized stablecoin system that combines fractional algorithmic mechanisms. It is built as an open source, permissionless, and entirely on-chain system, and currently operates on the Ethereum network with potential cross-chain implementations in the future. The ultimate aim of the Frax protocol is to create a highly scalable, decentralized algorithmic currency that can serve as an alternative to fixed supply digital assets such as Bitcoin. The protocol was founded in 2019 by Jason Huan, Sam Kazmane, and Travis Moore. Now let's talk about the tokenomics. So the network is supplied by two tokens, Frax, which is the stablecoin, while FXS is the governance token of the Frax protocol, which allows holders to vote on critical decisions and also changes to the protocol. Additionally, FXS holders receive a portion of the protocol's revenue generated by various fees and rewards within the system. Frax stablecoin supply is constantly changing to maintain a stable price of $1, thanks to its fractional algorithmic monetary policy. On the other hand, the Frax shares or FXX token has a hard cap of 100 million tokens upon launch, and the protocol does not have an inflation schedule. So overall, Frax protocol is a distinct and community-led stablecoin. More than 60% of the FXX supply is allocated to liquidity providers and yield farmers over several years. It is a fully decentralized protocol with on-chain governance. So how does Frax share work? Well, the Frax share protocol is an open source, permissionless stablecoin system operating entirely on-chain. It is designed to provide a highly scalable, decentralized, algorithmic alternative to fixed supply digital assets like Bitcoin. The protocol uses a fractional algorithmic approach where the stablecoin supply is partially backed by collateral and also partially algorithmic depending on market demand. The network is designed to maintain a stable price of approximately $1 USD, and it is a part of the Frax protocol, which combines elements of both algorithmic and collateral-backed stablecoins. And the Frax protocol uses a unique algorithm to dynamically adjust the supply of Frax coins to maintain a stable value. If the price of Frax drops below $1, the protocol will issue new Frax coins to increase the supply and also bring the price back up. Conversely, if the price of Frax rises above $1, the protocol will burn some of the coins to decrease the supply and bring the price back down. The community-governed protocol emphasizes a highly autonomous, algorithmic approach without active management. Frax is the first decentralized stablecoin to classify itself as fractional algorithmic, ushering in a unique fourth category of stablecoins. So let's talk about the components of Frax share. So the following are some of the critical components of the Frax share ecosystem. So we have governance. So Frax Finance implements a streamlined governance model derived from Compound Finance's governance structure. To propose modifications to the protocol, FXS holders must stake their tokens and cast their votes using VFX tokens. And as a result, locking FXS tokens unlocks VFX tokens, which are integral to the voting process. And then we have farming. So besides governance, Frax Finance has liquidity programs and also staking incentives through unique liquidity pools on the decentralized Uniswap exchange. These pools features novel token pairs with special incentives and emission rates. And in addition, VFX tokens offers farming boosts to participants in these liquidity pools, providing more rewards for external farming and staking activities proportional to their VFX holdings. Consequently, VFX tokens allocate voting power to long-term VXS token holders while incentivizing staking. And then there's also Algorithmic Market Operations or AMO. The Frax Finance Algorithmic Market Operations or AMO controller is a framework that enables composable autonomous central banking Legos. And the AMO model is a set of smart contracts that implement arbitrary monetary policies, which allows the AMO controller to conduct algorithmic market operations without disturbing the fractional algorithmic stability of the Frax token. And then we also have FraxLend. So FraxLend is a stablecoin lending platform that offers permissionless lending, and it's also customized non-custodial loans. It also has collateral onboarding to the Frax Finance economy. Frax can be minted into money markets like Aave for borrowing and interest payments, and it also generates earnings for the Frax treasury. The platform allows creating ERC20 token pairs, lending them to borrowers or using them as collateral, and lenders receive yield-bearing tokens for their deposits, which increase in value over time due to interest. So let's talk about the pros and cons of Frax shares, starting with the pros. So we have stability. So Frax share aims to be more stable than other cryptocurrencies, which can be subject to significant price fluctuations. It's also decentralized. So like other cryptocurrencies, Frax shares is decentralized, meaning that it is not controlled by a central authority such as a government or bank. Then we also have rewards. So Frax shares allows users to earn rewards for participating in its ecosystem, such as providing liquidity to its decentralized exchange. And then we also have transparency. So Frax share is transparent with its code available for anyone to review. And this can help build trust among users who are concerned about the security and integrity of their investments. So we have the cons next. So first of all, we have limited adoption. So Frax share is a relatively new cryptocurrency and has not yet gained widespread adoption. Then we also have complexity. So Frax share's hybrid model, while designed to make it more stable, can also make it more complex and challenging to understand for the average investor. And this can make it less attractive option for people new to cryptocurrencies. So let's talk about the use cases of Frax share. So we have the Frax stablecoin, which can be used as a medium of exchange, making transactions more predictable by mitigating volatility associated with most cryptocurrencies. So Frax provides a hedge against inflation, especially relevant in countries with unsustainable fiat currencies, and thanks to its backing of collateral and algorithmic mechanisms. So the project aims to become the first crypto-native consumer price index, or CPI, which could help track inflation in real time, hedging against currency devaluation and providing a reliable benchmark for other economic indicators in the future. So let's talk about the updates of Frax share. So currently the Frax share protocol is working towards accomplishing its roadmap, which entails expanding its treasury and integrating with other DeFi platforms. In one of the latest updates, Frax Finance's community voted to remove the protocol's algorithmic support for stablecoins and become a fully collateralized stablecoin. So right now it's currently trading at $8, and it currently has, as you can see here, the circulating supply right now at 74 million FXS tokens, and we can see that it's ranked 78th, and currently it has a market cap of 600 million right now. Now, where could the price go? Well, if one Frax share was worth the same market cap of Bitcoin, then one FXS would be worth $7,290, or an upside of 897x. Moving even further here, if it was that, for example, Dogecoin at 10.1 billion, that would put the potential price of $134, or 16x. And moving even further, let's just hypothetically say if it were to hit its previous all-time high price at and around $38, that would put the potential price currently at and around the position of Monero at 2.8 billion, which would put the potential price to $37.50, or an upside of 362%. Moving just a little bit further from that, if it was that of Avalanche at 5.6 billion, that would put the potential price to $74, or an upside of 820%. Let me know what you guys think about Frax shares in the comments down below, and also if you guys are even interested in it at all, and if you're bullish on its future or bearish. Anyways, guys, that's all I have for this one. We'll see you in the next one.